whether to buy a life insurance plan which will mature when Piyush will be of 65 or 70 of age, or till he will be of 100. Piyush is thinking of taking a whole life insurance instead of a basic insurance plan. After paying the premium for 65 years, if you survive till maturity, then you will not get anything in a basic insurance plan. But the whole life insurance plan promises returns apart from the longer cover. So, what should Piyush pick among these two? As the name suggests, a whole life insurance plan gives a lifelong cover. The policyholder is not covered mainly for 10, 20 or 30 years like in any other insurance policy, but he is covered throughout the entire period of 100 years or till he survives under the whole life insurance policy. On the death of the policyholder, the nominee gets the claim amount. In case of other life insurance policies, the maximum age limit is in the range of 65 to 70 years. If death of policyholder occurs after this age, then the nominee will not get the death claim. But the unique thing about the whole life insurance policy is that at whatever age the policyholder dies, the nominee will get the claim. People are also attracted towards the whole life insurance plan because the policyholder gets dividend or bonuses. Moreover, there is also an option of paying all the premiums beforehand, and you will keep getting the cover. This is called limited premium insurance. The claim amount of an insurance policy is tax-free under the section 10(10)(d) of the Income Tax Act. The premium of a whole life insurance plan is higher than that of a basic plan. Pratibha Girish, founder FinWise Personal Finance Solution, says that when people of 65 to 70 years of age approach an insurance company for new policy, the insurance companies know that they will be living more than this. Hence, not much families will approach for claiming insurance amount. But in case of whole life insurance policy, there are more chances that more and more families are likely to approach to make their claims. Therefore, the premium of whole life insurance policy is up to 3 times more expensive than the basic one. Now, the question arises is that does the whole life insurance policy gives you a better cover? Harshat Chetanwala of My Wealth Grows says, insurance is taken to get financial aid in case of the demise of the earning member of a family. Even if the policyholder survives till 100, the various risks and uncertainties of life are covered with the help of household income stream for 100 years. The idea behind taking 100 years of insurance is that after the death of policyholder, the family gets a sufficient amount. If one wants to leave behind the sum of the money for his family, then he should look to invest rather than take an insurance plan to serve the purpose. Many people buy whole life insurance policy so that they can leave behind a huge corpus for their family. But it is a big question that how effective will a whole life insurance plan is in building a huge corpus. For example, if a 32-year-old person buys an insurance policy of rupees 2 crore, then the premium will be rupees 18,255 up to 60 years, while the premium of the whole life insurance of 100 years will be rupees 62,868. The difference in the premium is around rupees 44,613. If you invest this amount in an investment instrument giving an interest rate of 8%, then at the age of 60, you will be having a corpus of rupees 45 lakh, that is rupees 45 lakh 93,619. If you keep investing for 80 years, then you will be able to build a corpus of rupees 2 crore 14 lakh. To be precise, rupees 2 crore 14 lakh 10,663. Therefore, instead of buying a long-term insurance plan, if that money is invested, then you will be able to create a huge corpus for your family. Money9 suggests money for insurance and investment should always be kept separate. Do not buy a life insurance policy in hope to get return or to save tax. A plan like whole life insurance can be right for those who have to take care of the family members even after death. You can buy a whole life insurance plan if there is a child with special needs, that is, specially abled child in your family. But if you only want to cover your own life, then basic life insurance is sufficient for you.